All right, guys, welcome back to the channel. And in today's video, I'm going to do a few things. The first is to discuss a composer update. The second is a portfolio update. And the third is just kind of the general sense of the market and what I'm doing in this time dealing with a lot of volatility. So the first thing is related to composer. I got an email last night or this morning from the CEO, Ben Rollert, about how you're able to migrate your account from Alpaca to Composer. So for those of you who don't know, basically Composer is the software. And what they did is they integrated it into Alpaca, which is sort of an API brokerage. And so you're able to build your systems of trading in Composer and then actually execute them in Alpaca. That's still the case, I believe. I think Alpaca is still executing the trades, but you're able to do most everything from your Composer account. So before, I used to have to log into Composer to build strategies, to kind of get an update, like for example in here where things stand, and then go into Alpaca to see the trades execute, to see the dividends come off, so on and so forth. Whereas now I was able to migrate my account, and as you can see here in the upper left-hand corner, literally second by second, the value's changing. So you can see the value is 111,000. You can see, 1889, today's change, so on and so forth. And you can also fund the account. And so because I linked it in Alpaca, it's already set up here in Composer. So they just kind of like build a wrapper is the coding term, where, you're still using Alpaca, but you don't have to go to both in order to do so. You can just do it all through Composer. It reminded me, so for example, I used to invest with Motif and Pershing. I used to get statements from Pershing, and I used to wonder, well, why am I getting a statement from Pershing instead of Motif? Because Pershing was the custodian, I guess the company that executed the trades on behalf of Motif at the time. So anyway, so that's just a cool little thing. And I think they're going to release also some different metrics tracking your portfolio, like the actual maybe Sharpe ratio of the entire portfolio. You may be able to go back like a month, a year, and see your actual returns, not just on the individual symphony, but portfolio wide. I have a feeling that's something they're working on. I haven't spoken to them directly about that, but that's just my best guess of probably what they're going to do here. So that's very exciting. That's cool, and I just like logging into Composer now and seeing everything. So you can see that this account, it peaked at 155, right before the big sell-off. It was like November, December. I think December, around Christmas time, maybe in the beginning of January. I'd have to pull it up there. But, so you can see it's down, about 40,000, 45,000. It was down. I mean, we just had this rally the last few days. It was down to like 102. So it was flirting, going under the six figures there. But you can see the last few days it's rebounded. And then just also, so you see the balance here. Then these are the individual symphonies that I'm running. And it's cool to be able to see, especially with all this volatility, and I do this a lot when I do my videos, is what's holding up. And you can see that buys the dip NASDAQ is one that's done really well. This one also, NASDAQ mean reversion. I think they're quite similar, between the two. Let's see here. Yeah, so NASDAQ mean reversion, buys the dip NASDAQ. So those two look like they're similar. And so going down further, permanent store of wealth is also holding up here pretty good. 1921, 2000. That's one that I built, and it's kind of like the lottery. Like if someone said to me, I just won $10 million. I want to invest in the stock market, but I don't know much about it. I just know I want to do it because I know that wealthy people either hold their money in precious metals and real estate and businesses and the stock market. And so I want to do that. This is something, kind of akin to Buffett's 90-10, where when he passes away, that's where all of the wealth is going. 90% in VOO, 10% in short-term bonds. This is a 70-10-10-10 portfolio that I created, and it's done, it's held up. Still, 1921. And then another one that's done well is another composer one, sector ETF Momentum. So that's a pretty cool one, and just kind of dealing with momentum in sectors. My guess is, see if we can click on it. It's going to hold probably like energy. Let's see here. It says created by me, but this was one I believe that Composer had. So it says the Symphony is an adaptation of an asset class momentum algorithm out of 10 sector ETFs. The 3 ETFs with the strongest 360-day cumulative return are selected and weighted equally. The Symphony is rebalanced at the start of each month. So you can see here, let's see what it's holding. So it is holding live holdings. It's holding real estate, financials, and energy. That makes sense. In an inflationary environment, people want to hold real assets. The price of real estate, if you're in the real estate game, as an investor, as a homeowner, you know that your commercial properties have gone up, your individual home has gone up. I mean, we bought a home here in Boca Raton in the sevens. I could sell it for 1.4 million now, 1.3 million within a year or so. VFH. Financials are cheap right now too. I do a lot of my value screens, and then there's a lot of different financial companies showing up. And then energy, again, I don't need to say much there. If you have a vehicle that is an electric and you're filling up, you look at the price of oil and gas. So that's that. So let's come back up here. Let's X out of that. So that's one that's done really well as well. So let's come down here. Sector ETF. Here's one also. Oh, this is the one I mentioned last time. It's by Meb Faber. He created this. And that one's held up as well, 1986. So that one's doing pretty good too. And monthly dividends. That one is actually up. It's not just holding up in this environment. It's actually up. Whereas like the Meb Faber one and the Permanent Store Wealth were just kind of holding up nicely in the 1900s. This one is actually up. And that just kind of makes sense. What I think you're seeing there is people are selling high flyers, the Teslas, the Amazons, the Cathie Wood stuff, and they're going to kind of blue chippy income producers, dividend payers. These funds hold monthly dividends. I also think there's a decent amount of REITs in there. So that could be, you could see in the sector ETF that VNQ REITs are up. So if there's a decent amount of REITs in there, that could also explain it, not just the fact that it's a dividend payer. And yeah, so coming down here, just going through, here's another one, 1961. There you go. So you see the commonality, dividend ETF. So it's not just that necessarily it is REITs, which could contribute a little bit, but you can see that dividends, people are flocking to companies that pay dividends, safe haven, so to speak. And let's keep going down. This one's in the 1800s, risk on, risk off leverage. Going through, here's another one, 1900. Buy the dip Dow, I created this one here. So that one's in the 19s. It's held up, using a little bit of leverage there and market timing. And then this one here is, I believe, Canadian banks. Right here, that one's also held up. So yeah, that's just a quick little rundown on, the new feature on Composer that you're able to migrate from Alpaca. So if if you're actually using Composer with real money, you can now move it over to Composer. You probably got an email from the CEO on that. But let's do a portfolio update to kind of see, I was at 1.2 million, and it was down in probably the mid 8s. Let's see where it is now. So let's take Composer here. We got 112, and it's changing by the second. 289. All right, let's do it again because it's higher. 11298. Oh, let's back off a little bit. Okay, 298. And you can see again, big day today, up 14,000 in TD, 15,985. And then we're going to go here. We are at 260. 278. So that's 887 in the three main accounts, and there's about 30,000 or so. Some smaller accounts, so 917. We ended last month at 915, so it's kind of been a flat month, so to speak. If those are the actual numbers. So that's that. We can come back over here to TD and just to kind of show you all this volatility. And if we take balance history here, and we go back here, so like if we go year to date, that's where it is now. So again, you can see, this year, starting the year, yeah, it's a great start to the year. The account's over 644,000. So you take 644, 744 minus 515, 985. And this account is down 128,759. And here's a great learning point for newbies. And I have this quotation of mine in the description of a lot of my YouTube videos. The ability to endure volatility, the ability to face volatility, I have to see how it's exactly phrased, is a superhuman power in investing. And I think that's true. Someone might say, oh my God, just this one account, and you're down 130,000. I could buy a Ferrari with that, or that could be the down payment on a home, or what have you. But that's just part of the game. When you're dealing with markets, you're dealing with volatility, and I feel it's a superhuman power that I have. But for me, I don't even blink. I mean, we can go back. Let's just even make it. You can see like in COVID and some other times. I mean, this is going back to 17. I mean, you can see in COVID here, this account was like 360, went down to 203 again, lost. But look at it coming out of COVID, and look at like this. See how precipitous this is here, how dramatic and quick this is. Whereas this one has been much kind of like a slower grind. You can see 670 on November 5th, down here, and then it went down to 478. So this account, just in the last few days, if we take 516 minus 478, this account has made about 38,000 or so. 15 of it today. On this bounce day, you can see the Dow is up 350, the Nasdaq is up 306, and S&P up 71. So 1.76%, 1.07%, 2.6%. But it's just good, for those of you who are new to investing. And I say this a lot to people, and I feel that it holds true. I feel that, it's why I believe that, if you look at Fidelity's study, they basically they posit that their best performing accounts are dead people and people that forgot about their accounts. Because if you're what Warren Buffett would call hypermanic, kind of a day trader mentality, and I'm up, I'm down, I'm up, I'm down, I'm up, I'm down, really with the soul of a gambler, you're likely to panic sell or do things to mitigate some of the pain. But when you're just, reinvesting dividends, dollar cost averaging, you're compounding for the long term. But yeah, this just kind of gives you a sense of that. And just, so what I was going to say though is, when you have sort of like an old world, blue-blooded, aristocratic sensibility, where you have, so my stocks are down, so my real estate holdings are up. And you have cash flow from other places, maybe an internet business. So maybe you're in e-commerce, maybe you get rents from property holdings, maybe, other sources of income. So you're not like, oh my God, I need this to survive. Trying to live off of the stock market, so to speak, as far as an income basis. The longer you can, it's like Social Security. People who take Social Security, 62, versus if they wait to 70, by waiting to 70, they get so much more a month. Kind of the same thing in a brokerage account. Like, who this really hurts, I said this last video, this sell-off hurts people who have just retired and are living off of their holdings and following the 4% rule, selling 4% of their portfolio in a down market, especially the first year or two. That can be a little frightening. So that's why it's important when you read all these books on personal finance, financial education. You come across a lot of different statistics, a lot of commonalities in those books, and one of the stats you see a lot, or things thrown out in these books, is the average millionaire has 5 or 7 sources of income, and I think that's helpful. I have 24 units of real estate that throw off about 20,000 a month gross. So if this account went down to zero, I would be, maybe then I would panic. Okay, right? But obviously, but basically, I would have other sources of income in order to get to see through that period. So anyway, so that's pretty much it for today. Just wanted to come on, and I haven't come on as much. I've been just so busy. I'm actually, another thing, speaking, it kind of fits in my point with multiple sources of income. Even though I have, about $1 million in the stock market, I have, 20,000 a month coming off in real estate holdings. I started a business recently on Etsy and Amazon, selling plants, selling actually Italian peppers, because it married, and you can see my pepper paintings back here and here. Yep. But that's a passion of mine, gardening, farming, from my North Carolina vineyard. And it sort of fits in my sense of Italophilia. So I'm growing specifically Italian origin peppers. Right now I'm doing the Jimmy Nardellos. I'm adding Neapolitans, and I'm adding Joe's Long Cayenne, which is a hot pepper originally from Calabria that got brought over to the Toronto area in Canada, and then donated to a seed company. But yeah, so just doing something like that. And actually, and I don't want to make this video about that, or maybe I'll do another video. I'll kind of pull up the Etsy page. It's Arbella Gardens, but I'll pull that up. I'll pull up the Amazon, and on that, that did $1,200 gross last month, and it's about $1,100 or $1,200 this month. So I'm having fun with it. It's another source of income. So I've been a little bit busy kind of setting that up and doing some shipping, and with the grow lights and all that. So anyways, that is it for today. I hope you enjoyed it. Any questions, concerns, anything like that, feel free to comment. And that's pretty much it. Take care, guys. Happy investing. Ciao.